Yeah. I told y'all I'ma step off this throne this one last time though. We ain't gonna address this ever again. Well, you bitches got it all wrong. I'm supposed to be who hated on. When I drop ratchet, they blasted it, that's their favorite song. I gave you passes with my name, what y'all was speaking on. If I pull up tripping and set it off, y'all gon' say I'm wrong. But y'all just pushing my buttons like they go ding dong. Back and forth, what I ain't gon' do, this ain't ping pong. I'm too grown to be arguing over the internet. We should be too busy if neither has made a million yet. So I'm ignoring you bum bitches from here on out. Y'all ain't hard to find when this Vegas blade is your whereabouts. Y'all selling pussy, I'm selling music, y'all selling hate. Y'all kinda cool, but I'm queening bitch, so you can't relate. My fans love me, they waiting on me to air it out. M's on my schedule, only appointments cared about. Y'all teaming up, y'all gon' need an army to tear me down. Keep playing with me, y'all ain't gon' make it another round. I've been about it, you bitches doubt it and know the deal. Keep popping off till I'm popping up to see how you feel. Oh, you just capping, let's keep it rapping this time right. Keep playing with me, gon' make me give you that limelight. I've been about it, you bitches doubt it and know the deal. Keep popping off till I'm popping up to see how you feel. Oh, you just capping, let's keep it rapping this time right. Keep playing with me, gon' make me give you that niggas acting feminine. They want me funkin' with they women friends, but while they beefing, I'm eating this, bringing dinner in. Same niggas that beat me up like she did that, be the same niggas that see me up and be big mad. I ain't jumping through no hoops, no shucking and jiving. I don't do free, tell me the fee, I'ma make a deposit. I'm still queening, name a bitch with the same buzz. Can't mention bitches unless you mention them afterwards. They was popping, was rapping, was getting attention, and now they whacking, even acts can't get them a mention. I fell back and let them act like they play my position. It's no comp, no cap, I be laughing and listening. Bunch of enemies, anything to be industry. Got them clout chasing, they making names off my energy. I see the motive, that sensitive shit the reason. That's a suicide mission, cause I'm queening all season. I've been about it, you bitches doubt it and know the deal. Keep popping off till I'm popping up to see how you feel. Oh, you just capping, let's keep it rapping this time right. Keep playing with me, gon' make me give you that limelight. I've been about it, you bitches doubt it and know the deal. Keep popping off till I'm popping up to see how you feel. Oh, you just capping, let's keep it rapping this time right. Keep playing with me, gon' make me give you that limelight. Yeah. Keep playing with me, gon' make me give you that limelight. Hey man, keep playing with me, gon' make me give you that limelight. I've been on this throne so long, man. It done turned into a rocking chair. I ain't gonna address this shit no more, man. Keep playing with me, gon' make me give you that limelight.
What's going on? Welcome to the Bag Talk. We tell you how to get the bag. I am your host, Mr. 313 Real Estate. I got my co-host, Jay Breezy. What's going on, bro?
What's going on, man? Happy to be here. How everybody feeling out there?
Good. It's hot to the mug, but
It's an understatement.
So today we're going to talk about the banking industry. We're going to talk about a little about mortgages. So we have a very, very special guest. I'm very grateful for her to come through and chop it up with us. Her name is Mayon. She's been in the banking industry for 9 years, so she's going to definitely tell us her story, how she got into it, the challenges she's faced, and kind of give us some game on the banking and mortgages in general. So without further ado, what's going on, Mayon?
Hi, how are you guys?
Oh, we're good. No complaints.
Good. How are you?
I'm good. Happy to be here. Thank you guys for having me.
No problem. So tell the audience a little bit about yourself, what you do.
Okay. Well, I got my degree in economics in Virginia, Hampton, Virginia.
Okay.
And
HBCU.
I was actually supposed to go and get my master's in DC in college. And I was dating somebody in Vegas, so I came to do an internship in mortgages for the summer. But once I realized how lucrative it was and how good I was at it, I decided to stay. So that was in 2012, and I've been doing mortgages since. And I've done all kinds, so there's so many different type of mortgages. You have, your high end, you have your construction loans, you have your standard loans, you have your down payment assistance, your VA loans. So pretty much mastered all of those, and I've been doing it since.
That's what's up.
Okay. I mean, it sounds pretty cut and dry. Like, so what challenges you face, like when you first got into the industry?
knowledge and being young and being a woman and being black.
Talk about it.
Double.
A lot of people didn't want to do business with me just because this is pretty much the biggest purchase of their lives.
Right.
And then they're looking at this young black girl sitting across the desk. They rather give their business to someone else.
Do you really know what you're talking about, sort of thing, right?
Correct. And what's crazy is white people trust me more than black people.
Well, that's typically how we do each other,
Why
right?
is that?
That's typically how we do
Why
each
do you
other.
think that is?
No clue. I had one lady and it was sad. She said, "Are you going to give me the interest rate for black people?"
What?
Wow.
And
That's what I need.
I
need
couldn't
that.
believe that that's a
did.
thought, that there's separate rates depending on your race.
Well, I'm glad you said that because I've read something, I can't recall, but it's been a while, but they say banks have a certain demographic of where they loan to, who they loan to, and like the interest rate of how they loan. So let's say if you live in the inner city, you might not be privileged to get certain loans or certain criteria like interest rates, lower interest rates because you live in the inner city. Is that true?
Once upon a time, a long time ago,
Okay.
that was true. It's called redlining.
Exactly, that's what it was. Redlining, yeah.
Yeah, so once upon a time that did exist, but now anytime you take a mortgage application as a loan officer, I have to ask the applicant questions that they're called HMDA questions. And it
Okay.
asks you don't have to answer, but if I'm face to face, I have to guess, but I have to ask you about your ethnicity, your race, and your sex. So those are government monitoring questions. Those questions are asked because of what you just mentioned. So what the government does is they take all the applications from certain banks. Every bank, they look at all the applications and they look at those government monitoring questions. They find a trend where you deny black people, then that bank's going to be denied. I mean, penalized. Or if you denied a bunch of, if there's a trend based off of race, gender, or ethnicity, then they'll deal with the bank. So there are things in place to stop that from happening. I honestly haven't seen that in the 9 years that I've been doing it.
So with that said, how you said you haven't seen it, but is that really a legal thing to do? What, like when you ask us for that information, and if a bank is prejudiced towards not funding people because of their zip code, do they really get penalized? Are they really strict on it? Is what
No,
I'm asking.
they are.
They are.
They
Okay.
are very strict on it. And honestly, your interest rate is based on where you're buying, not necessarily the zip code, but more so of the city, the state, just because there's, the average median income. Not because there's blacks or Hispanics or white people. There's because of the income of how much, what's considered. So, for example, a $400,000 house here and a $400,000 house in California is totally different.
Exactly.
So I do need to know where you are,
Okay.
just to put it in perspective of what I'm qualifying you for.
Gotcha.
But interest rates is based off of your credit, the equity, how much you're putting down, the type of loan that you're looking for, the
Okay.
amortization. But race doesn't play a part in it at all.
Okay. Because a lot of people really feel that way. That's why I'm asking. A lot of people feel that race does play a part in it. They really feel that way.
And I've learned that, but it totally doesn't.
Okay. Well, y'all heard it here first. It doesn't play a part in it. Okay. So don't be scared to go out there and get a loan to get that house of your dream.
So our audience is predominantly African American audience. So what do you think what are the trends that you see as far as the challenges for black home ownership, because it is low, especially in all the major cities like LA, San Fran, Chicago, DC? Like, is it just a generational thing, like, or is it education? Like, what do you think is like the trend as to why black families or just couples just have a hard time getting across the finish line and actually making it happen?
The education portion of it.
Okay.
The education. I'm not going to say buying a home is super easy, but it's not hard. And you just have to be able to stick the course.
Mm-hmm.
Right.
You can buy a home with, if you're a veteran, no money down.
Right.
If you're a first-time home buyer, 3% to 3.5% down. Which in the grand scheme of things, that's not a lot of money compared to the money that we spend. And then there's also down payment assistance programs where they'll give you the money for the down payment. And most times it's forgivable within 5 years, long as you stay in the house for 5 years. So it's the education piece, in my opinion. Just being afraid of stepping out there to go get a home.
Okay. Let me ask this question, and you might not be able to answer it,
Okay.
but from my past experience, is it common or uncommon for a note and a deed to be separated after a closing?
So there's two separate documents, so I'm not 100% understanding the question.
So I was in a situation years ago where my note, the note for the house that they gave me the money for,
Okay.
was sold separately from the deed. So they separated after I made my purchase.
No, that's not common.
That's not common?
That's not common.
Okay.
So the note is a promissory note saying
Correct.
you're going to pay back this money. The deed is I own this home.
Right.
So that's not common. It's all supposed to be a package deal.
Right. Yeah, because I went through an ordeal where they separated the two, but then, and I did like a securitization audit,
Okay.
and I found that they had sold the note in the stock exchange and made millions of dollars on it, and then was trying to take my house away from me because they were saying that I'm still responsible for something that, you separated, and it was against the law to separate it from what I was told. But I just wanted to know if you could talk about that, because some people don't understand how important the documents that you sign at closing, how vital that is to keep everything together and know exactly what you're signing.
So let me ask, was that prior to 2008?
Yes.
Okay. So
2001, I believe.
things are totally different. There was
Gotcha.
the industry wasn't regulated then. Anybody could be a loan officer. Anybody could sell a mortgage or get you a mortgage.
Okay.
For example, I was doing this for years, and I just happened to see the mortgage statement on my parents' kitchen counter, and I'm like, this is a horrible mortgage, and this is what I do for a living. How do you all have this mortgage?
Right.
And who did it? My cousin did their mortgage, who's a caterer. So anybody could do a mortgage back
Wow.
then. So now you have to get a license. You have to pass tests. I get my credit checked every year for every state that I'm licensed in. I have to pass a financial fitness test. My personal finances have to be in line to be able to do what I do.
Which makes sense.
Back then, it just wasn't like that. You had literally anybody doing it because it wasn't regulated, and you could make so much money.
Yes.
And so they were putting you in less desirable loans because those paid out more.
Yeah.
But that can't happen anymore.
Yeah.
So
Yeah.
Got you.
I don't even want to go into that because it doesn't even apply anymore.
Well, that's good, but some people still need to know that, and I appreciate you being honest and telling us that, because even for me, my mindset was still back then, and I'm thinking that it's still that way of living now. So you just shed some light on something that I thought still existed. So I
Did you
appreciate
get a
it.
good lawyer?
I'm gonna be honest. I went in there myself, and I was real close to winning the case. But as I found out later, the lawyer and the judge, they were in cahoots. And if I would have picked a trial jury, I would have won because I would have people hit. But I did a bench trial, meaning it was just me, the defendant, and the judge. So what I didn't know at the time was the judge and the lawyers, they were all in cahoots with each other, and he ruled in their favor. So and I had everything to prove. I still have the documentation now. It still burns me up because I let a good piece of property go. But that was just like a learning lesson for me, though.
I'm sorry.
Nah, it's all good.
So, we have like conventional loans and like non-conventional loans. So, a lot of people are familiar with the FHAs, but then there's so many other mortgages.
Right.
And with it being kind of like a seller's market right now, is it more beneficial to have, like, what's more beneficial now? Because it seems like if I'm coming in with a FHA and somebody else isn't, it seemed like they would have the advantage. Is that true? Or
Yes.
Okay.
And the reason why is, so FHA loan is backed by the government. So the government has more stipulations on how they want the home to be in regards to the appraisal, as conventional doesn't have as many. So if you're a seller and you're selling a home and you get a pre-approval letter and it says FHA, there's going to be more work required on you to fix that home up to be suitable for that loan, opposed to if you had a conventional offer, you can probably sell the home as is. Now, in both scenarios, the home does have to meet certain criteria. FHA just has more. Not that FHA is a bad loan, because it's a really good loan. It helps you get into your home. But in this market, it may just be a little bit more difficult. But you can probably qualify for more than you could with conventional, or even sometimes getting an FHA loan qualifies you for a house opposed to not getting a house. Sometimes conventional isn't an option for people.
I'm glad you said
Right.
that. Yeah, I'm glad you said that, because most people, they push FHA more than they do conventional, it seems like. Well, my past experience.
Because so FHA, you can go down to a 580 credit score. Conventional, you have to have a 620.
So there you go.
FHA 3.5% down. Conventional is 3 to 5%, just really depending on your scenario.
Okay.
FHA, the mortgage insurance, meaning you pay mortgage insurance if you put less than 20% down.
What PMI?
Correct.
Okay.
Right.
All right.
For FHA, it's a fixed amount.
Okay.
For conventional, it depends on your credit score. So if you have a marginal credit score at 620 and you only put down 5%, your mortgage insurance might be $400 or $500, which makes it harder for me to qualify you. Whereas if I put you on an FHA loan, it's a fixed amount of the percentage, regardless if your credit score is a 580 or a 720. Your mortgage insurance is still going to be that same percentage of what you're borrowing.
Okay.
So sometimes it's just much easier to just get you in the house. So a lot of times I tell my clients, I'm going to put you in an FHA loan and get you in the house.
Mm-hmm.
But if you do X, Y, and Z next year, I can put you in a conventional loan.
Okay.
Gotcha. So I know as far as underwriting, the client's income plays a huge factor
Yes.
in how much money they have. So just realistically, what's like some like metrics of maybe here in the Vegas market, like how much somebody needs to make, even if it's like household income, what realistic do they have to put down? Like what would they be looking at? And let's say if it was like because houses go here, 350?
Yeah, 250,
300,000.
300, yeah.
And it's only going up.
It's only going, especially in the Henderson area, yo.
It's only going up. So I get that question every day. It's not a cut and dry answer. And the reason being is how much income you need to qualify for a house depends from individual to individual. Because what we look at is your debt to income ratio. So how much of your gross income goes towards your monthly debt?
Okay.
And that is going to change the answer of how much income you need. So somebody that have $5,000 in overhead is going to need more income than a person who has $500 to buy the same house.
Okay.
It just depends on your debt load. And when we look at debt in the mortgage world, we're looking at your minimum monthly payments of all the debt reflected on your credit report, plus all the expenses for your house, including, principal, interest, taxes, insurance, and HOA, and any mortgage insurance. But we're qualifying you based off your gross income, so that's before taxes.
Gotcha. So, like, if it's a situation with like co-borrowers, could that work? Like, I know there was a time with FHA you could have up to so many co-borrowers, maybe like your grandfather or somebody could come in to add to pad your stats in a sense. Like, what is that like right now, or is it just confined to like an
Good
FHA?
question.
So you can do that, and I'm happy you asked, because that is I think the most confused part when it comes. People think, like, say if you're going to buy a car and you need a co-signer, I can just come and sign my name. It's easy. But when you're buying a house, it's totally different. But everybody think the experience is going to be like of buying a car. So if you're buying a house and I'm co-signing for you, now we have to qualify with my house and your house, my car and your car, your credit, your student loans, my student loans. So sometimes if I'm your co-signer and I got a lot of debt, even though I got a lot of income, that still might not help you.
Right.
Ah.
It has to make sense.
It has to
It
make
has
sense.
to make sense. So you can have co-borrowers, but the numbers still apply. It's not we're more comfortable because it's two people. It's you still have to have a certain debt to income ratio.
Right.
And then you use the lower of the credit scores. So whoever has the lowest credit scores is the scores that's used.
Gotcha.
Really?
That's
Why-
that's a good little nugget right there.
Yeah, I was about to say, so why do they use the lower credit score, not the highest? Or the middle credit score? I thought normally
So-
they would go with the middle score.
It is. So if I'm applying by myself, it's my middle score.
Okay.
If I'm applying with you,
Okay.
it's your middle score compared to my middle score and the lower of the two.
Ah. Okay. So it's technically the same, but it's just the lower of the two. Okay. Wow. Didn't know that. That's a gem right there, y'all. Because trust me, did not know that.
Okay, so just from like an underwriting standpoint, if I'm looking to buy a house, and let's say my score is 720, I make maybe 80 grand a year, and I'm looking to put a certain percentage down. Like, from what you do, like what access do you have access to, just the bank that you're dealing with? Like, how does that work? Or is it, do I have options?
Shopping
as
around like different
Can
products?
I shop around just like a window? Like how does all that work?
So, I don't work for a bank. I work for a direct lender. So
Okay.
that's all we do. We just do mortgages.
Mm-hmm.
And we offer you the rates that we have. We're not a broker. So a broker can look at multiple different companies to find you the perfect loan. Sometimes that's more expensive for you because, their fees are going to be higher.
So you guys are in-house then?
So that's a good question. I'm glad you said that. Because that was going to be my next question. So when you say that, is it in the realm of like private lenders or no?
No.
So what would be like the difference?
So private lenders like hard money lenders.
Hard money, yes, ma'am.
Hard money lender would be, I'm self-employed, but I write off all my income on my taxes, so I can't really show that I have any income, but I got a lot of money, so I want to put down 50%, but I need somebody to give me the money, but because I know a bank's not going to do it.
Right.
So what happened when the market crashed? People got mad at the banks for giving them the money anyway.
Right.
So now the banks has to show that customer A has the ability to repay the loan. So
Right.
even if it makes sense where, your rent is $2,500 and the mortgage is only going to be $1,500 and you've paid your rent, if I can't qualify you on paper, I can't do the loan because now as the bank, I can't show you have the ability to repay.
Okay.
So I can't make sure your loan is insurable because on paper you don't meet those standards. So a hard money loan is somebody where it makes sense. They can't get it through a bank. But a hard money loan, they're going to charge you a lot of money because they know you don't have another choice.
Right. Okay.
And they're going to want you to put down a very large amount.
So it's not like points on the
So
dollar.
it's usually like 30% they want you to put down.
Yeah, they
something
want
like
30, 50%. They're going to charge you 5 points up front. Probably going to give you a balloon payment. It's going to get real creative because they're not they want their money back.
Now, that's a good segue. Can you, because you talked about that briefly via text. Can you kind of explain balloon payments for those that's watching or just don't know about a balloon payment, how it actually operates?
Yes. So a balloon payment is, say you get a mortgage, you make your payments every month, and then balloon payment is the full amount is due at that point. So it's not that you can pay it off in increments. You're going to have to pay it all in one lump sum
Y'all hear that?
per that date.
Mm-hmm.
So if you're buying a house, you're going to get a document. It's called the loan estimate. It's a uniform document. It looks the same no matter what mortgage company you go to. On the very first page, it will say, does this loan have a balloon feature? And in all caps, it's going to say yes or it's going to say no.
Mm-hmm.
If it says yes, be leery because those aren't really
Exactly.
common loans.
No. And they could come back and bite you.
Yes, they can come get you.
Yeah, because do they sometimes come up where you're making a smaller monthly payment and then it balloons through, over the years, and then now you have this big lump sum that you have to pay?
Yes, those loans aren't as common nowadays, but they are out there.
Okay.
Some people want them. Like I have some of my high-end clients that request it.
What?
They want those type of loans because to them it makes them more disciplined. They know I only want this house for 5 years, so maybe let me do an interest-only balloon payment. That way I just sell the house, pay the loan off in full, and walk away with it. But that's for the more sophisticated buyer.
Got you. Makes sense.
But if you're just first-time home buyer, that's definitely not the route that you want to go at all.
So I want to get into the science of like refinancing. It seems like refinancing since the pandemic is kind of like
Yes.
really, really taken off. And banks have seem like they've starting to move away from HELOCs. They're not doing it as much. Like, can you kind of explain to us like why that is, and what are like the pros and cons of doing a refinance, and what are situations where it kind of like makes sense?
Okay. I love refinances. I think they make sense. So I'm a little
Okay.
biased. I did
Me
50
too.
million in refinances
Wow.
in 2020, and the year before 63 million.
Oh, wow.
Numbers.
So it's this way.
Talk about it.
People, like, you want to refinance to get better terms. So a lot of people, if you have an FHA mortgage and you're paying $200 a month in private mortgage insurance, and now you have the equity in your home because the housing market is going and you've improved your credit, it only makes sense for you to refinance because that $200 you pay in mortgage insurance doesn't benefit you one bit. It benefits the lender in case you default.
Right.
So if you refinance out of the FHA loan, you're automatically saving $200 a month. Plus, you're starting your amortization over. And so your savings could be in this scenario $200 to $300 a month. So you're putting yourself in a better position. And I always tell people, you look at, okay, I'm only, like some of my clients, if I pitch them a refinance and they say, well, I'm only saving $120 a month. Okay.
Only.
$120 a month, it adds up. But not only that, you have to look at your payment allocation. Right now, you paying $900 in interest, $300 in principal, and $300 to your taxes and insurance. Why don't you want to pay more towards your principal and less to the interest? And and a lot of times people don't realize the definition of interest, which is just the cost to borrow money.
Right.
I'm telling you, you can borrow this money at a cheaper cost, and you're being hesitant. So I think you should refinance. If you think about interest, it benefits you. I mean, you can write it off on your taxes, but who wants to do that?
And it's all tax free, correct?
Yeah.
To
a degree,
the
right?
cash that you actually get from the refi.
Well, that's a good question. Now, do they refi for the cash or they refi just for the interest rate?
So that is a good question. So you were asking about the HELOCs. A lot of people get a HELOC. A HELOC typically is a 20-year amortization. They're all different though, but commonly they're 20-year amortization. You can pull from it from the first 10 years, and then you have to pay it back the last 10 years.
Okay.
But typically you'll have an adjustable rate on it, so the rate will fluctuate with the market. When you can just do a cash out refinance and just have one payment, one lien against your home. You don't have to worry about the rate changing, and you'll have, so that means you owe $100,000, your house worth $400,000, you need $200,000. Now you got one loan for $300,000. You have one payment, that's not changing. One interest rate, that's not changing. So you have options. You can do a cash out refinance, you can do a rate and term refinance, or you can try to get a HELOC, which is more difficult. I just got a HELOC recently. It was easy for me. I'm not using it. I just wanted to have it open and available while the market's still doing good. Because once the market starts doing bad, the bank can just cancel your HELOC. They can just close and say you can't pull from it anymore. Or if you don't have a balance on it, they can just close it. So I just wanted to have something in place.
Okay.
Gotcha. So how long do you see, the money being this cheap at this point? Like, what is like your forecast, or like, did you hear any talk like, office cooler talk about?
Yeah. It's been a slow
game behind the curtains of
rates,
what the speculation is.
They started going up this year, compared to what they were last year. I couldn't breathe last year as much as my phone was ringing.
I bet.
Really?
But they're going up, but they're still relatively low.
So what's relatively low?
You can still get a good, 3.25.
Okay.
Which is a beautiful rate.
Mm-hmm.
Unless you heard about 2.5 last year.
Right.
And it's like,
That's
ouch,
crazy.
it went up,
Right.
I refinanced twice last year. That's how crazy the market was.
Wow.
For the same property, or for
on twice on one property.
So what are the terms? I'm glad you said this. So what are the terms for refinancing? Because I know back in the day it was a little different. So now you can refinance multiple times.
You can refinance as many times as you want, long as there's a net tangible benefit. Long as typically you're going down at least 0.5%. Sometimes you go from a 30 year to a 15 years. Or you'll go, you want to tap into the equity. It just really depends. But long as you can document that there is actually a benefit for the refinance, you can do it as many times as you want. Refinance does come with a cost.
Mm-hmm.
So for me, if it's going to cost me $5,000 to refinance and I'm saving $100, my break-even point by the time I sell that home may not make sense, so I'm not going to refinance.
Okay.
So it just really depends on everybody's individual scenario.
Okay.
Well, let me ask this question. What's the difference if you're trying to buy a multifamily, like a 4-unit, 2-unit, 3-unit? Is it different criteria versus buying a single family home?
That's a beautiful question. For the first-time home buyers, I would suggest if you can buy in a multifamily unit. It's a nice way to get you in your first home and also have some income. Single-family home versus multifamily, down payment requirements are different. But if it's your first home and you go FHA, you can still do 3.5% down. If you're going conventional, you may need 20 to 25% down.
Okay.
If it's not your first home, you're going to need 20 to 25% down.
Now, let me ask you this. do they do like stated income? I think I'm saying it right. So if you let's say you buying a 4-unit property and you have it's rented out, do they use that as like projected income for you?
So part of the appraiser can put together a rent schedule of what the rents are, and you can use that toward income. But stated income is totally different. There are QM means qualified mortgages. So FHA, conventional, all of those mortgages are going to be QM loans. A non-QM loan is going to be a bank statement loan, a stated loan, or something like that. But using income from a rented out property isn't considered stated, but you can do that. That's why it's so beautiful. It helps you qualify.
Right, because it takes, let's say, if you make only $40,000-$50,000 a year, but you qualify to get this property, they add that as your income for the year, right?
Correct, 75%.
Right,
okay.
75%. Because you have to leave a 25% vacancy factor just in case you lose a tenant.
Now, does some banks or some loan officers, do they require the buyer to live in one of the units? Or
Yes. The down payment requirements change if you don't live in one of the units.
Okay.
If you don't live in the units and it's an investment property, you're going to have to put much down and, be held to higher standards in regards to how much money you have in the bank, your credit score, etc. But if you're going to live in one of the units, it's easier.
Is it easier? And now, is there a time frame? Like, do you have to live in it for a year?
On your deed, the verbiage says that you intend to live in the home for a year. Now, if you move out in 9 months because something happens, then something happens. Nobody's coming to find you.
Can you say that again? What does it say? See, a lot of people don't read their contracts. They don't hear what people say and they go with it. But that's very big on what you just said. You intend, so that means you plan on it. But just in case you change your mind,
you can move or sell it.
Yeah.
Now, on the flip side of it, if you know that's really not your intentions, but you get the mortgage that way, it is considered mortgage fraud. And I only say this because there's a big letter that I have to give everybody. It says mortgage fraud is investigated by the FBI. Now, if for some reason they figure it out, they can call the note due. So you got 30 days. You need to give me $300,000. That would get you.
But I'm glad you said that, because that kind of segues back into what I brought up with my situation. Now they can say that the note is due, but they have to be able to provide the note and the deed. They can't separate the two. So if they're calling for that, then that's a smoking gun.
Correct.
Because you have to have the two together. They cannot be separated. So if you don't know what you're getting yourself into or know the law, so to speak, they will get you hand over fist every time.
That's true.
Yeah,
nope,
so
that's true.
Come on, y'all. Start educating yourselves out here.
So I wanted to talk about the Burr method, like, to buy, buy rehab, rent?
Oh yeah, that's a good question.
Refi. So if someone let's say they're kind of like an entrepreneur, like they don't have a square job, how could they like execute something like that? Where they can get an investment property, they do some rehab on it, rent it out. Now, maybe 6 months later, they look into, do a cash out refi so they can do more investment properties. What do they need? How do they need to be set up to really execute that?
So I haven't personally done that, but I know a lot of people that do.
Okay.
When someone, like you said, they don't have a 9-to-5, when they go into that method, they typically go for hard money loans because that's what they can obtain. And so the hard money lender that they're using at that time, they'll let them know what their game plan is. Hey, I need this money. I'm rehabbing this home. I'm keep it. I'm gonna take the cash out. I'm gonna buy another home. But a lot of times you have to earn the trust of your hard money lender. So everyone that I've dealt with, they'll charge you more more once you put down more because they don't know you.
Right.
And as you do more business with them, then they'll be more lenient. Okay, well, you can put down a little less. I'm gonna give you, charge you a little less. Yeah. But you got to prove yourself in the beginning. You got to find a good hard money lender that's willing to work with you or have some other way to get the money.
Gotcha.
So you've been in the business for 9 years. Like, how has it helped you? Has it helped you like get into other ventures, into other things, or you just kind of like, this is my lane and this is what I'm doing? Like, how has it really helped you grow over the years?
It's definitely helped me develop as a person. I'm reserved.
Okay.
And I've always been, but in this, 100% commission, I want to make some money.
Yeah, so exactly. Talk about
more open to talking to people. So that for me is a big deal. Like, I didn't even want to make my own hair appointments. Like, I didn't want to talk to nobody I didn't know. So, like, now I can just talk to anybody. I'll just talk to anybody about, and I'm good at what I do. So I think that's why I'm confident to talk to anyone. But it has helped me get into other ventures. 2020, it's a magazine. It's called Scotsman Guide. It's the biggest magazine in mortgage world, real estate world as well. I'm in that magazine twice.
Oh, wow.
Top women in the country, and just top, regardless of gender, in the country in that magazine. So it's helped me do that, because I feel like I've mastered everything there is to master in mortgages. Because there's so many different things. You have construction to perm, meaning you bought some dirt and now you want to build your dream home. You can't just go to the bank and get that loan.
Talk about that. I'm glad you brought that up. Talk about that a little bit if you could.
So you can buy lots. You can buy land. That's what I'm in the process of doing right now.
Okay.
Those land loans are hard to get. You have undeveloped land, so raw land and developed land. So raw land is just, dirt. Developed land, you got the pipes and everything under it. So it's totally different. A lot of banks don't want to do that because, let's just say, your finances changed. That's the last bill you worried about.
Yeah,
it's
because,
dirt.
Right. Yeah, but it makes sense. But that's where a lot of hard money lenders come into play, correct?
Right. And then you have some credit unions that'll do those type of loans as well.
What's up, Navy Federal? Talk to us.
I do like them. So you have those kind of loans where you bought, now you got the dirt, but you want to build, oh my goodness. So like, just to have an engineer to put together your blueprint, that could be $50,000, $15,000. So
you gotta get an architect.
Yeah.
Too, right?
All of that, exactly. Then you got to get all of that. So you need somebody that's, a good bank that's going to do that loan with you through the construction,
right? Disperse
the funds to the different people, and then turn that loan into a permanent loan where now you have a regular mortgage. So you close on it one time, and you work with the bank the whole time you building the home. But I'm just saying, there's just so many different mortgages, and I've pretty much done them all. I've done the adjustables, I've done the HELOCs, I've done the fixed loans, and so now I'm going into a different field. So this has allowed me to make the money to go into a different field, to have multiple sources of income. But it's a beautiful.
So now, when
industry.
you're doing the loans for, when you're trying to get the loans for, like, buying raw land, would it be feasible to like have like a group where the finances stretch out to make the loan work, or just trying to do it by yourself?
I'm a component for doing it by yourself.
Okay.
But I get working with a group of people.
It all depends on pretty much what land base you're talking about,
and what you're trying to use the land for.
Exactly.
If you're trying to use the land to do something commercial,
right?
Then
That's
yes,
what I'm basically talking.
Yes, then that makes sense. Working with good people, always you want to do that, because it can get messy.
Yeah.
So kind of give us like a realistic scenario of how that could play out with the construction loan. Let's say, all right, I want to go to the south side of Summerlin where it's just a lot, and now I want to build my dream house. Like, what would it take for that to happen? What type of resources would I need, and how would I qualify for that to happen?
You're plotting.
Okay. So you're gonna have to have a lot of money. I
figured that.
The 3%, 5%, 10% down payments kind of out the window.
Mm-hmm.
You're gonna be looking, depending on what price point of how much it's gonna cost you to build, you're gonna be looking 20, 30, 25% down of what you're going to need. But you're going to want to come to the bank already owning the land. You're going to want to have your blueprint, your plans.
Okay.
That way the bank can work with maybe your general contractor or whoever you have to start dispersing the funds. Because if it's going to cost you $2 million to build, the bank won't give you $2 million. They're going to disperse
draws
to whom the funds are due. But you want to at least come with the blueprint and the plans and the land already, and the bank will work with them moving forward.
Okay, so once you execute this, it works out, the house is built. Like, what does that open up to you as far as like other opportunities in a bank's eyes?
You mean from you as the consumer?
Yeah, so I wanted this house built. I got it built. Everything worked out. I'm making my payments. So maybe I'm trying to like, okay, do further business with the banks. What does that avail me to? Like, as far as like other opportunities, does that give me like an opportunity to do like a commercial building now? Like, can I step it up a notch now that I've showed
If you
them that
qualify.
I can handle that?
If you
Okay.
qualify. So a lot of people think, when I worked at a big bank, a lot of people say, I got a few million here. I can't believe you won't qualify. It's
Yeah, I
separate.
hear that all the time.
So you'll like, if I don't want to say a bank's name, but
Say their name.
if you got
ahead.
Bank A that you bank with, and they have a mortgage, you can get a mortgage there. They're still separate, and people think that they're all together. They're all under the same umbrella, but they're separate. So just because I was able to get you this mortgage, don't mean I can get you this commercial loan.
Right.
It's
okay.
separate. Banks like for you to have multiple lines with them, multiple accounts in different departments, relationship banking, but it doesn't always just kind of give you the green door. Now they'll make exceptions for you, depending on how much you have with them, but it's not a guarantee. And it really depends on the institution. The smaller state institutions, the credit unions, they will work with you more than the bigger banks.
I
Just
agree.
about to ask that question. For the listeners out there, is it better to go through a credit union or like a major bank, like a Bank
It's
of
better
America?
to go through me.
Okay, excuse me. Y'all hear that, right?
It's better to go through me for your mortgage. But no, honestly, it is better to go through me. But you
Talk
want
that talk.
You want to use not necessarily the institution. It's not the institution so much. It's the actual loan officer. As loan officers, we have so much freedom to come and go as we please. We're not micromanaged because we're commissioned. You want somebody that's not a part-time loan officer, somebody that's really committed, that's going to walk you through it. Because I meet a lot of people a lot of times that want to buy a house, and it's just not feasible for them right now. So you want that loan officer that can stick with you, check up on you, and you stick with them, and and have a plan.
Right.
Some people just want their money, the commission right now. So you really want to make sure you get the best loan officer, not so much the institution.
Okay, that's good. Now let me ask you this: underwriting. In the past, I keep going on the past because that's just my experience. How are underwriters currently right now? Because I know in the past, underwriters will wait till the very last minute before you close to ask for something to prolong you closing.
That's never going to change.
That's never going to change. So, do you have a decent relationship?
They pull up to your job the day of the closing.
Man,
make
hey,
sure
I
you work
need
there.
this. I'm like, wait a minute, bro, I don't get off till 8 o'clock
That's
tonight. I
never
can't
gonna
get it for
change.
you. So, but do you have a relationship with some underwriters who are not that strenuous when they're doing a closing, or just every underwriter has to follow
Every
that?
underwriter. So people don't understand. So if an underwriter underwrites your loan and too many people default on their loan, whether it's 7 years, 8 years, or however down the line, they get penalized. They have to be licensed to do what they do.
Okay.
So they're trying to make sure they
Mitigate the
cross
risk.
all their T's and dotted all their I's. Now that just goes back to what I'm saying. You want to have a good loan officer.
That's where you come in.
That's where I come in.
Talk.
Somebody that can
Come
look
on.
at your file and say, okay, the underwriter is going to ask about this. You can tell me now, you can tell me later, but I'm telling you it's better for you to, go ahead and tell me this. So you want somebody that's thorough, that's going to look at everything. Like, for example, I just closed a deal in North Carolina. This other lender couldn't get it done for 4 months. I closed it in 10 days.
Go ahead now.
Wow.
So, what states are you licensed to deal in?
Like
Not
28
licensed.
states. 28 states. 28
Oh,
states.
okay.
Yeah.
A lot.
Yeah,
Damn,
28
so that's
states.
half the country.
The main one.
That's half the country. Okay. Chicago, Detroit.
I love Michigan. I love doing a lot of loans in Michigan.
out
I
to
love
Michigan.
doing loans in Illinois.
Yeah.
However, Illinois is a little bit more difficult because you got to do extra stuff. It's an anti-predatory lending state. Texas, I do a lot of business in Texas.
Uh-oh.
Yeah, Texas is booming.
Texas, California, Washington, Arizona, Michigan, Ohio, Nevada. Honestly, it's spread. It's pretty even, but I have my favorite states based off of the type of people. Like, people in Michigan and Ohio are just so cool, laid back,
I agree.
understanding.
Oh man, just because you from Detroit, yeah, dude, you from
I
Detroit,
agree.
Mr. 313.
So I get excited about those type of clients. Everybody's just different, and I just like talking to so many different people because, some people I gotta go be a little bit more professional. Some people, they just want me to act like I'm
Hey,
talking
be
to my
you.
friend,
Right,
you know?
be you.
So,
yeah, that's how we like to move.
yeah, so
Okay. Any other questions?
Yeah, so for people that's kind of like, because it seemed like, in my opinion, college is getting a little bit not as useful. So somebody was like, you know what, I just want to kind of get into something where I can learn some game and make a good living. Like, what is your advice for those people who may want to get into the profession that you're in?
If I could do it all over again, if I didn't go to Hampton, because that was the best experience I ever had in my life.
Uh-oh.
I believe
I would have went straight into the industry.
straight in,
I
right,
would
right
be
out the
retired
gate.
today.
That's big.
I would be retired
How
today.
so? So how do you feel that though? Like what's going in? You mean like just going straight to real estate school, or what do you mean?
No. So to be a loan officer, you don't have to go to real estate school.
Okay.
But back then, when I was in college, is when it wasn't regulated, so I would have made a lot of money, and I know how to manage money. But
Showing your age.
you don't.
Just a little bit. Just a little bit.
You don't need a college degree to sell a home or to sell money. Is what I tell people I do.
Say that again. You don't need no degree to sell money, because that's exactly what you're doing.
Yeah, you don't need a degree.
That's big.
So it's like 20 hours of, was it 20 hours of
I'm licensed in
take
so
your
many states,
exam?
and each state has different.
okay.
I can't remember, but probably so. You go to, you get your education. You do continuing education every year. You got to pass your test, and like I mentioned earlier, they not messing with you if you got back dues and child support.
Credit gotta be straight.
Oh man, here
You
we
gotta
go.
have your finances.
Yeah.
in
Ain't
order.
too many females got back paid child support, so you should be good at that one.
They look at the criminal. They just want to make sure you're good. You go through all of that.
Okay.
But it's a good industry to get into. A lot of people are scared because it's commissioned. But
But it's unlimited though.
Yeah,
It's
it's unlimited. And I tell, because I managed as well, I tell everybody, I said, you come in here, you want to make $1 million, you make $1 million. You want to make 30,000, you make 30,000. It just depends on you.
Depends
And
on
you
your
would be
work ethic.
surprised that some people come in and they make 40 grand, sitting next to somebody making 800. With this in the same time, with the same resources, with the same clients. So
Mindset.
I would definitely say if you want to get into the mortgage industry as a loan officer, you will, my opinion, you want to start with a big bank. You don't want to go to a broker. You don't want to go to just a mortgage company. You want to start with a big bank. I say that because big banks has the resources to put you through training. I started at a big bank. I started as an intern. I got an offer, but they have so much training to teach you. Now, when you work in the bank, you work under the bank license. That's where you learn. Then you go get your own license. So you don't even need to be licensed to work at a bank. You just got to get through the door.
Right.
And they're not doing all of, all the
Compliance. Yeah.
checks and stuff like they do when you get your own license. The income is totally different, but at least you're learning. A lot of banks have programs for, their junior mortgage program or whatever they may call it. But I would say start at a big bank. Learn it. You have their clients. You have access to their built-in clientele. That way you can get your feet wet and learn it, and then go ahead and, when you're ready, go and get your own license and find a mortgage company that's good for you.
Thank you. So can you kind of give everybody your information, how to reach out to you?
You said
I'm not, like,
you said go
I'm not
through you.
opening up the DMs. I'm just saying, like, for as far as like,
If they're interested
No,
in doing
I'd
loans.
rather open up the DMs because than put my number or anything out there like that. Because
No.
I'm particular in how I do my business.
how you move. Okay.
I'm real particular, and I think
You
that's
gotta
why.
respect that.
But I'm on Instagram, bratface90. You can't tell I do business on there because I keep it separate. But that is a way to reach out to me, and then I can work with you of how to get better. I just don't want my phones literally ring all day. I just can't have my phones flooding.
Gotcha. Like, do you do workshops like at any times for like helping people kind of like
I
getting their
don't.
credit together?
I
and all
used
that
to,
stuff? Okay.
but I'll say this: if you're a client of mine and you come to me, and your credit's not there, I do work with you. I'm not a credit counselor, but I know how to look at your credit profile, and tell you where you need to be and how you need to get there. There's lenders that have the ability to do so, but it costs them money. I eat the cost for you, because I want you to be in the home. So, Bradface90, my DMs are open.
All right.
Oh.
If you're interested in buying a home, the process of getting into a home, I will hold your hand. A lot of people don't want to hold your hand. I will hold your hand. through the entire process
That's
to make
what's
sure
up.
you get there. But as long as you commit to me, I'll commit to you.
All right. Thank you much for joining us.
Thank you so much, man. Lots of game, man. We really appreciate it.
Thank you guys for having me. I think this is a really, really good. People need to hear about it.
Yes.
Thank
But
you.
we'll love to have you back one day as things progress to, give some new tips and pointers on what's going on currently in the market.
I got you.
All right. There you have it. Bag Talk, ladies and gentlemen. We out.
Indeed. June 17th, everybody. Oh.
Next show coming in.
June 17th, we'll be in Atlanta, Cocktails and Credit. We have a 2-day event. We'll talk about credit. We'll talk about investing, getting your business together. We're going to 7 cities. Atlanta's the first city. Go to cocktailsandcredit.com. That's it.
All right. Peace out.
It's a little different this time. Yeah. We come alive in the nighttime. I'm bruising down in the state 9 to 5. 9 to 5, 9 to 5. I'm going buck 5. Hope I don't see them cop lights. In the fast lane, yeah, he told me about the warning signs. And I'm trying to live fast, die young, we ain't got time. No, we do it part-time. The benefits don't benefit, it ain't full-time. More than 40 every week, putting overtime. I'm clocking 7 days a week till I'm prime time. That ain't enough time for the short time. Success, I'm trying to see a million by the summertime. Before it's fall time, and they forget mine. Cold world without my pockets warming when the shivering. Foot on the gas pedal, leave it stuck and dry. Never slowing down, had to cut